shall be appropriate to paid equal amounts. Here, equity capital can either be with voting rights, with differential rights as to dividend, voting or otherwise is accordance with such rules and subjects to such conditions as may be prescribed. The Company Act 2000 amend the provision of Act permitting companies to issue shares with differential votes. Here, differential votes according according to the central government came out with the companies. Here, Rule 2001 permitting the companies limited by shares to issue shares with differential rights has to dividend. Votes are otherwise subject to the following conditions. The company has distributable profits in terms of Section 205. 205 of the Companies Act for preceding 3 financial years, proceedings the year in which it was decided to issue shares. The company has not defaulted in filling annual accounts and annual returns for the 3 financial year immediately preceding the financial year of the year in which it decided to issue such shares. The company has not failed to repay its deposits or interest thereon. The due date, redeem its debentures on due date or pay dividend. The articles of association of the company authorities the issues of shares with differential voting rights. The company has not been convicted of any offense arising under SEBI Act 1992. The company has not defaulted in meeting investors' grievances. The company has obtained the approval of shareholders in general meeting by passing resolution under Section 1994. Here, preference share company. Preference share company is a hybrid security because it has features of both ordinary shares and bonds. Preference shareholders have preferential rights in respect of assets and dividends. In the event of winding up the preference shareholders have a claim on available assets before the ordinary shareholders. In addition, preference shareholders get their stated dividend. Therefore, equity shareholders can receive any dividends. The dividends on preference share are fixed and they must be declared before a legal obligation exists to pay them. The fixed nature of dividend is similar to that of interest on debentures and books. Debentures and bonds. The declaration feature is similar to that of equity shareholder dividends. In general, forms of preference shares are as follows. Cumulative and non-cumulative preference issues. The cumulative preference shares give the right to demand the unpaid dividends of any year during the subsequent years when the profits are ample. Cumulative convertible preference shares. The cumulative convertible preference share is an instrument that embraces features of both equity shares and preference shares, but which essentially is a preference share. The CCPs are convertible into equity shares at a future specified date at the predetermined conversion rate. Once it is converted into equity shares, it passes all the characters of the equity shares. Participating and non-participating preference shares. Participating preference shares are those shares which are entitled to a fixed preferential dividend and in addition carry a right to participate in the surplus profit along with equity shareholders after dividend at a certain rate has been paid to equity shareholders. Redeemable and irredeemable preference shares. Subject to an authority in the Articles of Association, a public limited company may issue redeemable preference shares to be redeemed either at a fixed date or after a certain period of time during the lifetime of the company. The Companies Act 1956 prohibits the issue of any preference share with is irredeemable or is redeemable after the expiry of a period of 20 years from the date of issue. Deferred or funders shares. A private company may issue deferred or funders shares. Shares are normally held by promoters and directors of the company. That is why they are usually called funders shares. These shares are usually of a smaller denomination, say 1 rupee each. However, they are generally given equal voting rights with equity share, which may be of higher denominations, say 10 each. Thus, by investing relatively lower amounts, the promoters may gain control over the management of the company. As regards the payment of dividends to holders of such shares, the articles usually provide that these shares will carry a dividend fixed in relation to the profits available after dividends have been declared on the preference and equity shares. Sweet equity shares. What is sweet equity share? Here under Section 79A of the Companies Act 1956, a company can issue sweet equity shares of its employers or directors at discount. Sweet equity shares nothing but discount for the employers, directors, etc. Hybrid instruments. Hybrid instruments have both the features of equity and debentures. These kinds of instruments are called as hybrid instruments. Example are convertible debentures, warrants, etc. There are two ways a company can raise money from financial markets, namely debt and equity. Here, growth and recent trends of capital market in India. The first recognized stock exchange was established in India at Bombay in 1887 when the Securities Contracts or Regulation Act 1956 was passed. Only seven stock exchanges filed: Mumbai, Ahmedabad, Kolkata, Madras, Delhi, Hyderabad, and Indore received recognition. By the end of the March 2008, the number of stock exchanges rose to 23. The Indian capital market, which remains to slug up to 1980, started gaining a significant momentum after 1980. The abolition of control of the capital issues and the arrival of SEBI made a new benefits in the growth of the stock market. Liberalization measures in 1991-1992 took the stock market for a boom. The capital market in India includes the following institutions. What are they? Instu- ins- Insurance companies, commercial banks, specialized financial institutions such as Industrial Financial Corporation of India, IFCI, Industrial Development Bank of India, IDBI, State Industrial Development Corporation, SIDC, State Financial Corporation, SFC, Union Trust of India, UTI, merchant banking agencies, mutual funds, individuals who invest directly. The supply of funds for the capital market comes largely from individual savers, corporate savings, banks, insurance companies, specialized in financial agencies, and the government. There are two main segments of the Indian capital market: the primary market and secondary market. Both these markets have both these markets have shown tremendous growth in the post-liberalization period. Growth primary market. Growth primary market. Here, number one, new capital issue. New capital issue by private sector as a result of liberalization policy adopted by the adopted by the government in July 1991. The subsequent abolition of the subsequent abolition of capital issue capital issue during May 1992. Here, the primary market got a tremendous boost. The number of new capital issues by private sector was only 364 in 1990-1991, and the amount raised was 4,312 crore. The resources mobilized by private companies from the primary market was 63,638 crore in 2007-8. Various factors that have contributed to development of primary market. Those: repeal of Capital Issue Act 1947, reforms by SEBI based on Janakiram Committee recommendations, permission to foreign venture capital investors and state industrial development cooperation to participate in public issues. Next, government securities market. Since 1991, the investor base for government securities has expanded rapidly. Besides banks and insurance corporations, finance companies, corporate and financial institutions have also started investing in government securities. The gross market borrowings of the central and state governments rose from 12,000 crores in 1991-1992 to 2,55,984 crores in 2007-8. Then, mutual funds. Mutual funds have proved to be important channels for mobilizing public savings since 1987-88, when the public sector banks are allowed to set up subsidiaries to undertake mutual fund business. Resources mobilized by mutual fund, including UTI, under various schemes rose from nearly 11,252 crore in the year 1991-1992 to 1,50,000 53,802 crore by the end of 2007-8. Here, development in secondary market. We are discussing about development in secondary market. Industrial securities market. Despite setback due to irregularities and scams, the industrial securities market has witnessed speculator growth in the post-liberalization period. The various factors which have contributed to the development of industrial securities market are: they are improved in balance of payment position, fairly high level of foreign exchange reserves, encouraging financial results of companies, increasing investment by the foreign institutional investors. Then Bombay Stock Exchange. Bombay Stock Exchange is the barometer of the Indian economy. Today, Bombay Stock Exchange is a world number one exchange in terms of the numbers of listed companies and the world fifth in transaction members. The market capitalization has on December 31, 2007 stood at USD 1.79 trillion. An investor can choose from more than 4,700 listed companies, which for easy reference are classified into A, B, S, T, and G groups. National Stock Exchange. The National Stock Exchange of India was set up in November 1992 and started trading operation from 30th June 1994. It provides facility for trading of equity investments, warrants, debentures, preference shares, etc. NSE was the first to introduce a fully automated screen-based trader system, which allows trading members to trade from their offices. Over-the-counter Exchange of India. Over-the-counter Exchange of India was set up in August 1989 and become operational in October 1992. It has slowly expanded its operations both city-wise and script-wise. The number of listed companies on OTCEI, which means over the counter exchange of India, stood at 102 has on March 31, 2007 has against 6 in 1992, 93 and 65 in 95, 96. It has been modeled along with the NASDAQ market of the USA. Some other developments in Indian capital market. Development financial institutions has been set up to raise funds from the banking sector and the general public. Infrastructure Leasing and Financial Service Limited, set up in 1988, specializes in leasing or equipment and infrastructural development. Credit Rating Information Service of India Limited undertakes the rating in fixed deposit, debentures, and credit assessments of company. Stock Holding Corporations of India Limited has been set up for providing custodial services to UTA, LIC, mutual funds, and GIC. Here, SEBI, which means Securities and Exchange Board of India, reforms on capital market. SEBI was set up in 1988 as the statutory body to remove the shortcomings and deficiencies of the capital market and to regulate its functioning. The government made SEBI a statutory body in 1992, adding further strength to it. SEBI has been introduced various measures to protect the interest of the investors and to check fraudulent and unfair trade practices in the stock market. Reforms initiated by SEBI in the primary market. Here, reforms are regulating merchant banks and bankers to the issues. SEBI regulations the functioning of merchant banks through a code of conduct. It has also brought the bankers to the issue under its purview to ensure investor protection. Disclosures. Companies must disclose all material facts and specific risk factors while going for public issues. SEBI has introduced a code of advertisement to ensure fair and truthful disclosure for keeping shareholders updating about the performance of companies. Optional underwriting. SEBI made underwriting optional to reduce the cost of the issue in case if the company fails to raise 90% of the amount offering to the public for subscription, the entire amount collected would be refunded to the investors. Compulsory deposit of first 1% of issue capital. Companies have to keep 1% of the issued capital in the form of deposit with stock exchanges. This amount is fortified in the sense specialized in the event of non-compliance with the provisions of the listing agreement. Reforms initiated by SEBI in secondary market. What is secondary market reforms? They are buyback shares. As per the company's ordinance, January 7, 1999, the companies are now allowed to buy back their shares subject to the regulations laid down by the SEBI. Demand dematerialization. DMAT facility has been introduced since 1998. It has been made compulsory for domestic financial institutions, banks, mutual funds, and foreign institutional investors having a minimum portfolio of securities or rupees 10 crore. Capital adequacy norms. The two protect market intermediaries and investors from default and other risks. SEBI has announced a capital adequacy norm of 3% for individual members and 6% for corporate members in their outstanding position. Registration of brokers under the provision of Securities and Stock Exchange Board Act 1992, all the brokers and sub-brokers must attain due registration under the regularly framework of the SEBI. Internet trading. SEBI has now permitted internet trading in a limited way through registered stockbrokers. Investors can place orders through the internet and stockbrokers would execute their orders. Rolling settlement. SEBI introduced rolling settlements optional for demand scripts. The compulsory rolling settlement was introduced in 10 selected scripts in January 2000. Foreign institutional investors. The government has allowed foreign institutional investors to invest capital market provided they are registered with SEBI. Derivative derivative trading. SEBI introduced derivative trading in June 2000. Summary. We are discussing summary. What is summary says? The capital market is a market for medium and long-term funds. It refers to all the facilities and institutional arrangements for borrowings and lending term funds. The demand for long-term funds comes mainly from industry, trade, agriculture, and government. The central and state government invest not only on economic overheads such as transport, irrigation, and power supply, but also a basic and consumer goods industries and hence require large sums from the capital market. The capital market has a crucial significance in capital formation. Adequate capital formation is indispensable for speedy economic development. The main function of the capital market is the collection of savings and the distribution for industrial development. This stimulates capital formation and hence accelerates the process of economic development. A sound and efficient capital market facilitates the process of capital formation and thus contributes to economic development. The capital market is composed of those who demand funds and those who supply funds. Thus, the borrowers and lenders in the financial market for medium term and long term funds constitute the capital market. The Indian capital market is broadly divided into two categories. They are the securities market consists of the gilt-edged market and the industrial securities market and the financial institution. Thus, the Indian capital market is composed of the gilt-edged market or the market for government securities and industrial securities or the corporate securities market. The capital market includes development financial institutions such as IFCI, SFC, LIC, IDBI, UTI, ICICI, etc. They provide medium term and long term funds for business enterprises and public authorities. Apart from the above, there are financial intermediaries in the capital market such as merchant bankers, mutual funds, leasing companies, venture capital companies, etc. They help in mobilizing savings and supplying funds to investors. These are the summary we are discussed. Next, we are discussing next unit. The unit name is Stock Exchange and SEBI. The introduction of Stock Exchange and SEBI. The stock exchange is synonymous with the word secondary market. The secondary exchange is a market for old securities, that is, those which have been already issued and listed on a stock exchange. These securities are purchased and sold continuously among the investors without the involvement of the company. A stock exchange provides not only the free transferability of shares, but also makes continuous evaluation of securities traded in the market. The securities of government are traded in the stock market has a separate component called the gilt-edged market. Government securities are traded outside the trading wing in the form of over-the-counter sales or purchases. Another component of the stock market deals with the trading in the shares and debentures of limited companies. The present unit gives complete information about the stock market and power of SEBI. Definition of stock exchange. Stock exchange are an important ingredient of the capital market. They are the citadel of capital or fortress of finance. They are the theaters of trading in securities, and as such they assist and control the buying and selling of securities. According to the husband and Dockeray, securities or stock exchange are privately organized market which are used to facilitate trading in securities. However, at present, stock exchange need not necessarily be privately organized one. As per the Securities Contracts Regulation Act 1956, the stock exchange the stock exchange has been defined as follows. It is an association, organization, or body of individuals, whether incorporated or not established, to assist, regulate, and controlling business in buying, selling, dealing in securities. In brief, stock exchange constitute a market where securities issued by the central and state government, public bodies, joint stock companies are traded. Characteristics of a stock exchange. The following are the main features. It is an organized capital market. It is an open market for the purchase and sale of securities. Only listed securities can be dealt with a stock exchange. It works under established rules and regulations. The securities are bought and sold either for investment or speculative purposes. Functions of stock exchanges. The stock market occupies a pivotal position in the financial system. It performs several economic functions and renders invaluable services to the investors, companies, and the economy as a whole. They may be summarized as follows. They are stock exchanges provide liquidity to securities. Since securities can be converted into cash at any time according to the discretion of the investor by selling them at the listed prices. Stock exchanges ensure safety of funds invested because they have to function under strict rules and regulations, and the bylaws are meant to ensure safety of investable funds. An organized stock exchange operating under the well defined rules and regulations minimizes the dangers of speculative dealing and private manipulations. Stock exchange provides a ready market for trading in securities, and in this way, capital is made more mobile. Stock exchange helps in determining the prices of securities. Stock exchange enables the business firms to raise large volumes of funds from the market. Stock exchange increases the capital worthiness of the business enterprises. A company whose shares are listed in a stock exchange is considered to be a sound company. A competitive and efficient stock exchange acts as a barometer of business conditions in the country. Stock exchange helps the investors in many ways. It enables the investors to utilize their surplus funds gainfully. It helps them to shift from one business to another. And quotations enables the investors to know the worth of securities. Procedure of transactions. The transaction consists of following five stages. They are placing the order. First of all, the client places the order to buy or sell a particular security or both at a fixed price or the best possible price. Next, execution of orders. Big brokers transact their business through their authorized clerks. Small ones carry out their business personally. Orders are executed in the trading ring of a stock exchange, which works from 12 noon to 12 p.m. on all working days from Monday to Friday, and a special 1 hour session on Saturday. Trading outside the trading hours is called the curb dealings. Curb dealings. Curb dealings. Reporting the deal. After making the bargain, the details of the deal are recorded in the books of the broker and reported to the client. Preparation of contract notes. Usually, the authorized clerks enter the particulars of the business transacted during a particular day in the Kacha Sauda book. From the rough notebooks at the close of that working day, from Kacha Sauda books, they are transferred to Pakka Sauda books, which are maintained separately from the ready and delivery contracts and forward delivery contracts. Then the broker authorized clerk prepares a contract note. A contract note is a written agreement between the broker and his client for the transaction executed. It contains the details of the contract made for the purchase or sale of securities, the brokerage chargeable, name of the company, number of shares bought or sold, net rate, etc. It is prepared in a prescribed form and a copy of it is also sent to the client. Settlement of transactions. Finally, the settlement is made using delivering the share certificates along with the transfer by the seller. It bears the stamp of the selling broker. The buyers then fills up the particulars in the transfer deed. Current settlement procedure of trading transaction. In case any investor purchases shares, the payment for the shares is required to be done before the pay in date for the relevant settlement. Of course, it is subjected to the rules and regulations of the exchange also. Similarly, in the case of the sale of shares, the delivery of shares has to be made before the pay in date for relevant settlement or has otherwise provided in rules and regulations of the exchange. Types of members in stock exchange. Jobbers, they are dealers in securities in a stock exchange. They can't deal on behalf of the business or public. They purchase and sell securities on their names. Their main job is to earn profit due to price variation. Next, commission brokers. They are nothing but brokers. They buy and sell securities on behalf of their clients. For a commission, they are permitted to deal with non-members directly. They do not purchase or sell on their name. Tarawani Wals. Walas. Tarawani Walas, they are like jobbers. They handle transaction on a commission basis for their brokers. They buy and sell securities on their account and they may act as brokers on behalf of the behalf of the public. Sub Sub brokers are agents of stock brokers. They are employed by brokers to obtain business. They can't carry on business on their name. Arbitrageur traders. They buy a security in one market and sell the same in another market to get opportunistic profit. Authorized clerks. Authorized clerks are those who are appointed by stockbrokers to assist them in business Physical shares. A physical share is equity only owned by whoever holds the physical stock certificate. The issuing firm neither registers the owners of the stock nor tracker tax transfer of ownership. Demat shares. The conversion of physical shares into electronic form of shares. These kinds of shares called demat shares or dematerialized shares. Today, when you buy or sell shares, brokers include dematerialized shares. To get your shares dematerialized, you have to open a demat account, and get into an agreement with a depository participant. You need to surrender your physical share certificates to the company which issued them, informing them and giving details of your agreement with your depository participant. Based on this, the company would cancel your certificates and register your shareholders in the name of your depository participant as a registered owner of those shares and intimate this registration through a notice to your depository participant. On receipt of the aforesaid notice from the company, the depository participant would register you as a beneficial owner of those shares. Remember, as a registered owner, your depository participant has no rights of benefits from those shares. Stock exchanges in India. There are at present 23 stock exchanges in the country which are recognized by the government under the Securities Contract or Regulation Act 1956. Two other exchanges are set up in the reform era. They are the Bombay Stock Exchange, National Stock Exchange, and Over the Counter Exchange of India. Among all the stock exchanges, the Bombay Stock Exchange is the country's leading exchange in terms of number of securities listed there. Bombay Stock Exchange. Here, Bombay Stock Exchange is a leading and the oldest stock exchange in India as well as in Asia. It was established in 1887 with the formation of the Native Shares and Stock Brokers Associations. Bombay Stock Exchange is a very active stock exchange with the highest number of listed securities in India. Nearly 70 to 80% of all transactions in India are done along with BSE, Bombay Stock Exchange. Companies traded on Bombay Stock Exchange were 3,049 by March 2006. Here, Bombay Stock Exchange is now a national stock exchange. As a Bombay Stock Exchange has started allowing its members to set up computer terminals outside the city of Mumbai, which is the only stock exchange in India which is given permanent recognition by the government. Some important facts about Bombay Stock Exchange. Bombay Stock Exchange was the first in India to launch equity derivatives, free float index, and USD adoption of BSE Sensex and Bombay Stock Exchange Sensex and exchange facilities, internet buying and selling policy. Bombay Stock Exchange was the first in India to acquire the ISO authorization for supervision, clearance, and settlement. BSC, Bombay Stock Exchange, was the first in India to have launched private service for economic trading. Its online trading system has been felicitated by internationally renowned standard of information securities management system. Bombay online trading system. Bombay Stock Exchange online trading was established in 1995 and is the first exchange to be set up in Asia. It has the largest number of listed companies in the world and currently has 4,090 937 companies listed on the exchange with over 7,700 traded instruments. BSE introduced an online trading system. The only thing that an investor requires for online trading through Bombay Stock Exchange is an online trading account. The trading can then be done within the trading hours from any location in the world. Bombay Stock Exchanges has replaced the open cry system with automated trading. An open cry system is a common method of communication between the investors at a stock exchange where they shout and use hand gestures to sell orders. It usually takes and involves a lot of face-to-face interacting system. Trading is easier and by market makers and brokers, dealers. National Stock Exchange of India. The National Stock Exchange of India was set up in 1993 to encourage stock exchange reforms through system modernization and competition. It has been set up by financial institutions and banks with IDBI as a nodal agency. It is expected to serve as a model exchange integration the stock exchanges all over the country by providing nationwide stock trading facilities and electronic clearing and settlement objectives of National Stock Exchange to set up a nationwide trading facility for equities, debits, and hybrids to facilitate equal access to investors across the country to provide fairness, efficiency, and to trading in security to enable book entry system RL standards to improve fair, efficient, and transparent trading of securities through an electronic features of National Stock Exchange. The National Stock Exchange employs the market operates with all participants working from their computer terminals to receive orders and execute them. The identity of the trading member is not revealed to others when he places an order or when he is influencing the market segment of National Stock Exchange. National Stock Exchange trading trades in the following two segments: wholesale depth market segment. This segment refers to the trading platform for a wide range of fixed income securities like central government securities, bond issued by public sector undertakings, zero coupon bonds, treasury bills, commercial papers, certificates of deposits, mutual funds, corporate debentures, etc. Capital market system. This segment of National Stock Exchange provides a platform for transparent and fair trading of equity preference shares. Debentures traded retail government securities, small and medium enterprises, SME exchange. The Bombay Stock Exchange has launched SME Exchange on March 13, 2012 with the listing of the first public issue of BCB Finance. The SME Exchange would promote the growth of small and medium enterprises by generating operation potential investors, attracting various investors' profits, reducing information asymmetry, and nourishing new markets for equity financing. SME are functioning in many countries like AIM London, COSA, KOSADQ, Korea, and TSX Venture Exchange Canada. Collectively, these exchanges are attracting more than 450 listening or listing every year and list more than 4,000 fines. No doubt the new SME exchange would promote balanced development besides fostering new entrepreneurs and new investment communities. Stock Holding Corporations of India Limited. Stock Holding Corporation of India Limited was sponsored by seven All India financial institutions such as IDBI, IFCI, ICICI, UTI, NIC, GIC, IRBI. The main objective is to introduce a book entry securities in existing system. Credit rating agencies rate each company based on its credits credentials, and such a rating will help the common investor to take appropriate decision investments. At present, there are four credit rating agencies in India, namely the Credit Rating Information Services of India Limited, Credit Rating Agency of India Limited, Credit Analysis of Research Limited, and Duff and Phillips Private Limited. Here is the topic we discussing. Next, our next class started from Securities and Exchange Board of India. Here is stock exchange is very important for your exams, for your competitive exams. And we have discussed previous chapter, and we now discuss chapter 10 stock exchange also, SEBI also. Next we are discussing two Securities and Exchange Board of India, functions of SEBI, summary. Then, okay, we will winding up our classes.